Good evening, everyone. Beautiful, intelligent women, CA women, and today again we are meeting like every Wednesday evening, 5 o'clock, 5 to 7, blocked for WMEC and Sky High Symposium. And today we have this is like 16th, कौन सा है, Praveena madam, which is the series
17. 17.
17th. So since last 17 Wednesdays we are meeting. So almost I can say this is a 14, 17 means four Wednesday in each month. So
Almost 4.5 months.
almost more than 4 months we are meeting. So I really thank all the participants for putting faith in us and joining this series. It's our endeavor to serve the best for our women fraternity. And with this series, with the name what is suggest, Sky High Symposium, we want the sky is not the limit, and we can fly in the sky. And by sharing the knowledge with what our faculties are having, sharing their experiences, and the coordinators who are putting lot of efforts for coordinating the each and every session on Wednesday. So we feel that we are sharing the knowledge, and by sharing this knowledge we are upgrading the knowledge of all the participants. And with this, once again I welcome all the participants. And today we have with us CA Praveena Oswal, who will be sharing her experience and knowledge on um, central government subsidy schemes. So what I understand, she has done lot of research into the subsidy schemes, and she has been awarded prize from ICI also as one of the best researchers 2 years back. And that's why we thought ki whatever research and whatever knowledge she's having on the this front of subsidy, let it be shared with all the members. And hence we have invited so Praveena madam, very warm welcome to you. We have with us say Kavita Umapati, who is doing mainly practicing in the valuation area, and she will be sharing some valuation strategies. So welcome Kavita madam. We have see Chandani Tolani. She is a managing committee member in the office where I think vice chairperson of Gandhidham branch, and one of very important branch of Western region. So, and I can whenever I have visited, she has always shared her joy and overwhelming love to me. So welcome Chandani to you. We have with us here Pooja Bisaria, and she's very expert in teaching field, and she is teaching to CA students as well as commerce students. And she has always been available for the institute, for students and members whenever we have invited. And she has been the past convener of a study circle, and having a vast experience in this moderating and motivational sessions and coordination part, as well as the career path for the students. So welcome CA Pooja. Uh, and we have with us CA Bhavi Thakkar, and she is a past chairperson of Bhuj branch. And Bhuj and Gandhidham are like both brother and sister. And whenever we meet Bhavi, we meet Chandani, and vice versa. And today also we thought ki let both of them together, so that we always have this both brother sisters together. So welcome Bhavi Ben to this Sky High Symposium. And friends, again, if any of you participants want to take the session or be the part of moderation or coordination, please feel free to connect us WMEC. We are putting our best of the efforts to share the knowledge of our women fraternity, various other initiatives we are taking. So please feel free to connect to us if you have any query, if you want any support from our side, from institute, from WMAC. Feel free to connect anytime with us. We are always available, and our team of office of WMEC, Shanu, Ruchi, all are also there, and you can reach out to us. And with these opening remarks, I welcome you, and I request Bhavi. I think she will be introducing our first faculty. I request Bhavi to take the dais and introduce Kavita madam. Thank you and welcome you all. Bhavi madam, are you there? Bhavi madam is there or not?
Hello.
Ha, Bhavi madam.
Yeah.
Over.
Thank you, ma'am. Thank you so much. A warm good evening to all of you. It's my honor today that ma'am has chosen and given us a chance to introduce the versatile speaker, CA Kavita Umapathy, here in this session. And I would take the honor to introduce her. When Ruchi madam forwarded her brief profile, I was so impressed by the ma'am's profile that it is really a thing that in women fraternity, if we have such ladies who are going to take such a lead in the valuation field, it's one of the moment of pride for all of us. Because I remember back in 2011, when I had taken up one project on valuation, I found all the male members leading the field. But now I'm so happy to see ma'am there. Let me introduce brief. Kavita madam has graduated in commerce from Chennamalam Women's College, Chennai. She has passed her chartered accountancy. Along with it, she is awarded the Masters in Philosophy, Commerce from University of Madras, qualified UGC examinations for lectureship, qualified registered valuers exams conducted by IWBI on asset class, securities and financial assets, having wide professional exposure in audit and taxation. Her work experience shows that she has served as an accounts manager in Lonamiad Corporate Services Private Limited, Chennai. She has served as a consultant in ICMC Corporation Limited, Bali, as a partner in R. Jankimaran and Company Chartered Accountants firm in Chennai, and now she is presently a partner with Pattabiraman and Company Chartered Accountants firm in Chennai from April 22 onwards. In teaching field also, she has conducted certificate courses on e-commerce, while includes online share trading. She is a faculty in the Institute of Chartered Accountants of India, Chennai branch, published articles in peer review journals, resource person for guest lectures in colleges and training candidates appearing for NET exams, faculty for certificate course on GST for various colleges in Chennai. This is a very small list she has given us, but after hearing, we'll be very much impressed because the knowledge she is having and she is going to spare with us. Ma'am, welcome you, and we are eager to hear you.
Yes. So happy evening to all. Hope am I audible? Yeah, okay, fine. Thank you. So it's my privilege to be a part of this wonderful initiative as taken care by Madam CCM member CAPC Chawla ma'am. And I really accord my special thanks for inviting me here to share my thoughts on this subject. And I'm happy, and I should thank Ruchi Gupta, who is also, she's the one who has been coordinating with me from the day one, and she was so nice. And so that hospitality they have given is really memorable one. And I'm really happy to be a part of this session. Nice session, nice ma'am. So like we feel like women are empowered. That's the thing. Thank you so much, ma'am. Fine. So now let us get into the topic, which I have chosen for today is valuation approaches and methods. So basically, I have recently qualified my registered valuer examination in 2018, 2020, because the valuation itself has been introduced the Companies Act from the year 2018 October. So like we are being started with the first batch of, we have joined like, so there, if I see there are, as ma'am rightly said, there are majority, if I see in my batch, almost 150 men, around only, I find 5 or 6 women are there in that batch. So as she rightly pointed out, valuation is majoritically it is being done, but now people are joining and they are clearing, many women are coming out with this profile. Okay. So before getting into the topic, I'll share my screen so that I can continue my presentation. Right. So is my PPT visible?
Yes,
Yes,
ma'am.
Yeah, thank you. So let us have an interactive session. If you could share with me even in a chat box, that would be more, I'll be more privileged, because if I speak on talking, I'll feel like I'm talking to a laptop. Instead, if it's an offline session, no issues. I can see the face and I can understand whether you people are able to follow or not. But if it is better, if you have any clarification then and there, we can clarify. And if you could use the messages or you can even talk, that is absolutely not an issue for me. Okay, so fine. So today I have chosen the topic of valuation approaches and methods. So it's like a basic topic, like how to, if you do want to do a valuation, what method we can do. So here, and my agenda here is to discuss about, first of all, how to choose this method. So because we have a different methods, wherever, so we cannot apply all the methods in all the circumstances. So we will be discussing about the criteria and the conditions to apply the particular method, and we try to analyze in depth in that particular approach what are the various methods available. Okay, so that will be our point of discussion today. Maybe they have given me around a 45-minute session. So I'll take exactly half an hour maximum, because it is going to be a crispier. I don't want to waste most of your time. Like after half an hour to 45 minutes, next 15 minutes, we'll have as a any doubts, clarification, question and answer session, we'll try to make it. So I'll try to concise it as crispy as possible so that it will be interesting for you to understand. Okay. Yeah. Fine. So let us move on to the, yes. So basically, we always say, right? Yeah, there is Oscar Wilde. Maybe you all known about him. He's a very popular poet. He said, like, a cynic is the one who knows the price of everything, but the value of nothing. So what does it mean? Like, see, so as basically what you feel, the difference between the price and the value. That is what I just want to come out in the introduction session. So introduction of valuation in that. So the price, basically the price is what we pay for the product, and the value is what we get. That is the anything, let it be, even maybe anything. For example, you take a sari, we all like to wear, right? So if you take that price is what you pay, that is, see, that very easy to fix a price, because when you go to the shop, it will be there written directly and you can easily fix it. But measuring the value is something difficult, because value is how we feel. It is an interior feeling, internal feeling of a people. It has got more theoretical things rather than the quantitative thing, right? So the value has got a different. For example, if that saree is gifted by my mother, it has got a different value. It doesn't mean, see, whatever the price it may be, you will never feel, right? But if that is from my mother, means it has got a different value, which I'll always want to preserve it. So this is what I mean to say. So anything can be bought. There is a money or price, but value is what? Something which you derive out of that, which has got. So which is the most important for everybody in this. So so you have to ascertain every time what is the value that you are going to derive from the product we buy, right? So especially here, I am an asset class, I have qualified in the securities and financial assets, and we being a chartered accountants, we should have to have an idea about how to understand the portfolio of shares. So if there is a shares, maybe what purpose we are going to buy, whether it is for the investment or for the financing. So we have to understand, then based on that only a value can be added. Okay. So the term, you would have always heard this value. fair value. So what is this fair value? Can anybody have an idea about fair value? So we always use the term, right? Fair value. In income tax, every time we use fair market value. In even accounting, we use the fair value. So what is basically a fair value? The fair value is the value that product which derives. So usually we have some criteria, like there should be an willing buyer, willing seller, and it should be an unrestricted market, and they should have that knowledgeable. So their knowledge between the buyer and seller should be equanimous. There shouldn't be any exploitation and dominance over the buyer and seller. So the buyer and seller should be independent and they should be willing to buy and sell. And we always use the term arm's length transaction. Arm's length means what? There shouldn't be any consideration which influences the value. Other than that, that is what we always say, right? So the fair value is the value which is being arrived between a willing buyer, a willing seller, and the knowledgeable parties. So they assume that they both have the fair knowledge, good knowledge on the product which they are going to buy, or in the market on which they are going to trade upon. Okay, so at that value, so the value which is being carried on is considered to be the fair value, right? So yeah, then so we'll understood. So now we'll directly move on. So we have understood what is the value and price difference between price and value. What is fair value? Now let us move on to the valuation approaches. We call this as valuation approaches. Okay, there are 3 approaches. The valuation approaches can be broadly classified into 3: cost approach, market approach, and income approach. Okay, right. So we'll one by one we will get into, and we'll try to understand what is the approach, in what scenario we will apply this approach, and what are the methods under which various methods are there in the valuation. So basically, how do I select a particular approach? If I given the value, so if they have given tomorrow to give value, please kindly value this kind of shares. So before that, I have to choose which approach I have to. Then only I will go and apply the methods, right? So in order to understand the approach to be applied, I first should know about the basis and value of premise. So first, the purpose, that chart I have just shown, purpose. So what purpose am I going to value here? The purpose may be even given by the regulations. There are various regulations. Sometimes we used to value under the Income Tax Act, which says 11 UA section. Then somewhere we used to have a IBC, Insolvency Bankruptcy Code. Everybody would have know about it, where there is a valuation required. And sometimes even SEBI opts for the valuation whenever there is a share transfer. It may be a private placement or offer for sale, or if it's a convertible debentures they issue. In all those cases, the SEBI requires a valuation to be done, right? And you know that recently Section 247 of the Companies Act has been introduced, which says a registered valuer means a registered valuer only can be engaged in order to arrive at the value. There are a lot of situation or scenarios in the Companies Act where a registered valuer are required to value, right? So first you have to understand the purpose. So for what purpose we are here valuing? If it is a statutory purpose, means we should understand this. The statute itself, they will give. See, like a common example, we all know that valuation under Section 11 UA. We use the net asset method or book value method. We will be using the formula A plus B plus C minus D. Maybe many of you would have done, because a chartered accountant can value this under 11 UA method, right? So like that, you have a lot of things. So a statute itself sometimes will give you the methodology also. So the purpose mostly defines what to do. Then the base. So what is the base? How you should value? Okay. The base represents here the standards. So how we have in valuation, we have ICAI or ICAI, Institute of Chartered Accountants of India, registered valuer organization, have published the standards. See, in India so far, this is the only institution which has given with the come out with the valuation standards. Apart from this, we have only international valuation standards, which is being issued under Welder. So we have these two things are the base for us, which as a registered valuer, you're supposed to follow this. What are they? IVS, which is International Valuation Standards, and you have ICA RVO, which is our own institute has come up with the registered value, that is valuation standards. But if you compare, both are almost have the same, like we have the content will be almost the same, but this will be in Pardesi language. This is being designed in India. It will be in Desi language. That's all. That is the difference I can say. Other than that, the technical things all are similar only. Right? This is what a base. So a base is what is the base. So as a professional, you should have some standards to be followed. That standard which is called as base. Then we have premise. So the premise is for what purpose you are going to value. So the valuation of the business enterprise may be for various purposes. Sometimes it may be for acquiring the acquisition, merger or demerger, amalgamation. For that purpose, you may value. Or it may be even for the liquidation value you have to give. If the company want to go for liquidation, there is a requirement as a liquidator. They should find a value of that organization, business enterprise. So the premise here represents for what purpose you are going to value. So these three things are the base, which is important to determine the approach. And once approach is determined, there are various methods which we can see. So the chart goes like this. The purpose is the one, the reason for which the valuation is sought for. Base is the standards which we are following to do the valuation. And the premise is the assumed use for what purpose we are going to value, right? So these three things will get majority defines, tell us what approach we should use, okay? And then automatically when once we choose the approach, we will fix up with the methods also, okay? Here, the valuer has got the privilege to use even more than one valuation method. No issue, because if he has got highly confusing which method to choose better or which approach he can go for, the valuer here can even choose any method, even combination of methods are available, but he cannot simply average it. He has to assume some weightages based on the conditions of the asset, the nature of the asset, availability of the reliable information. On all these things, the valuer has to definitely decide that what approach can be used, and he can have a combination, no doubt, but he has to attach a weight. A weight should be attached to it. That is, it should be weighted average, not a simple average. So simply I have two methods, let me mix it and divide it by 2, is not allowed, right? Here you have to assume the weightage shall be given based on the asset nature. What is the how far the information is reliable? Because here as a valuer, like it's not like accounting. See, in accounting, doing adjustment is a sin, but in valuation, not doing an adjustment is a sin, because we have lot of adjustments to be made, because we are going to ascertain the future value, for which we require lot of adjustments to be made. Okay, so for that we have to understand this information, then only we can proceed for choose the right method of valuation, right? So first we'll start with the market approach. So here I just see the market approach itself, we can talk 3 hours, but my intention here is to give a brief idea about what is it, what are the major things which have been covered in a simple terms. That's all, so that everybody will have an idea about what is it, right? So the market approach. So basically, many of it is very, if you see, compared to cost approach or income approach, market approach is the easiest way. Why? Because easily available. See, whether it be if it's a quoted shares, there is no issue at all, because already there will be the particular share will be traded in the stock exchange, and we can easily find out what is the recent transaction, based on that what is the value it has been, and we can easily arrive at that value, right? So it is easy to aware. So if your asset is comparable, or if there is a similar nature of asset available in the market, for example, I'm going to value a public limited company enterprise. So if I see the same industry, the same which is being listed company, then the value will be quoted in the stock exchange. So I will just compare whether my subject asset and the comparable asset is how it will be, whether it is identical or not. Based on that, I may even do a lot of adjustments in order to arrive at the fair value. Okay. So market approach is a very simple approach where there is an already published information which will be available for you, which you can easily adopt it and just do some adjustments. Here in this approach, you have two things: observable value, unobservable value. So what is the difference between observable and unobservable? The observable means which is having some established nature, which is there. We need not prove that. Like a stock shares, if you are going to value, there is a stock exchange which there the shares will be traded. So definitely everybody will know the value of the particular share. That is what available information, which is observable. Unobservable, if you go to a private company, definitely the private company shares will not be listed in the stock exchange, right? So what will happen? You will not be getting the comparable data easily for them. So you can take a public company instead and put some adjustments to it and try to arrive at, so that you can use that value for here, right? So in market approach, see these are the applicable. So when you can use the market approach, that particular subject asset has been recently sold, or it is actively and publicly traded. So it should be always traded, and there are frequent or recent observable transactions related to the similar assets. If these conditions exist, then you can say that you can easily adopt the market approach. So when you can easily find out the comparable asset for this, or if it is actively and publicly traded, or you have a recent observable transaction. If these criteria is there, if it is fulfilled, your subject asset is fulfilling all these criteria, yes, you can easily use this market approach method. Okay. If you take, fine. So what are the methods under the market approach? So far, we have seen approaches are basically three. In that market approach, we are coming into the methods. So you have, these are the two methods which is most popularly followed, which is there even in IVS standards, International Valuation Standards, and also the ICAI RVO standards as well. So first one is comparable transaction method or guideline transaction method. And the second method is guideline publicly traded comparable method. So what you can compare? If you have a two organization, you can check what is the EBITDA. EBITDA is the most common factor, which you can easily compare. The EBITDA is the level of EBITDA statement. There is a level of same activity which you can easily take a comparison, or earnings multiple which you can take. These are all some of the comparison which can be used to analyze and identify the asset value. Fine. So comparable transaction method and guideline publicity. So we'll just see what is it. Yeah. So comparable transaction method is also known as the guideline transaction method. So we have to, as a valuer, you have to just search for the latest transaction, right? So, like the similar asset has been sold or purchased. Okay. So you just take that alone. That value you try to take and you compare that with your subject asset. So you just take a compare, which you are going to compare, that you take and analyze the differences between your subject asset and the comparable data. Then you arrive at the valuation. That is some of the adjustments to be made. At last, you get a valuation. So here, no complex calculations involved. It is only a comparison, and the valuer has to apply a lot of judgments, best judgment he has to make, right? So what are the steps? First, what is the units of comparison to be made? Then calculate the relevant comparable transactions and the key valuation metrics. As I told you, it may be a beta, or it may be earnings multiple, or a P ratio, price earning ratio, like that. There are a lot of comparison key valuation metrics are there, which you can take as an indicator for taking a subject asset and comparing data you can use. Then you perform a comparative analysis, both qualitative as well as quantitative, both in similarities as well as difference between comparable asset and the subject asset. Then accordingly make a necessary adjustment. Then you apply the adjusted valuation metrics to the subject asset. Automatically you reconcile and you'll get the valuation. Sometimes you may even use multiple valuation metrics also. At last, you will arrive at the. Okay, this is with respect to comparable transaction method. Next, you have guideline publicly traded method. So this method you can use only when your subject asset is recently and publicly traded most. Otherwise, you better don't go for this method. Better the first method itself is better, because there it goes to the transaction. Here it goes to the subject asset. So the subject asset is been recently or publicly traded. Then you can easily compare both, right? So this is what. So again, this what identify the valuation metrics and comparable the participants relevant market and identify the relevant guideline. What is that? Calculate the key valuation metric. Then compare it. A consistent comparative analysis you do both, like how we did in the transaction method. Then make a necessary adjustment, apply the valuation metrics, and you get at the value. Or if you more than one value is used, apply the weights and then find out the value. So as I told you, you have to make adjustments in valuation, right? Especially when you use the market method, it is important to make a lot of adjustments, because every time the asset B value may not always exactly similar to the what is marketed, right? We may take some other, definitely there will be some similarities or differences will be there. For that, these are the adjustments which you are supposed to do. We call that as discount for lack of marketability, discount for lack of control premium, or sometimes this is the discount. The discount means the value will get reduced. You have control premium also there, which sometimes the value may be even added, right? Then a blockage discount. So what is this lack of marketability? As I told you, if I'm having only, if I'm taking a publicly listed company as a comparable company, but my subjective company is only a unlisted company. In such case, the publicly listed company, the comparable data company which I have taken has got more scope of marketability. That is, easily it will be traded in the stock exchange compared to my private company shares. So I have to apply this lack. So there is a lack in marketability compared to the comparable asset. My subject asset got some lack of marketability. So I cannot apply. See, because if it is marketable easy means the value will be high. But when I don't have marketability of my product, it's all lined with the demand and supply, right? So if my value is not to that extent, I will try to find out the DLOM, which is called as discount for lack of marketability, and adjust. Similarly, what is this control premium? If my comparable data is having a entity, that is, it's having a controlling interest, that is, it is having a lot of subsidiary company under one control. Whereas my subject data, subject asset which I am using may not have that much controlling premium. They may not be. So in such case, I cannot always take a big decisions. No? If I have a controlling interest, what does it mean by controlling interest? More than 51% of the share capital. If I don't have in that, I cannot say that I'm controlling. So definitely, if you are not taking decisions, the value may come down. So that lack of control premium you have to take. Similarly, if you are taking opposite way, I have taken a comparable data for this company, that is the company which is having a trading. Whereas my subject asset, my subject asset is a trading, having a control interest, but my comparable data doesn't have. Then I will have to add the value, because definitely there is an advantage of having this control premium. So for control premium, sometime I will add, and sometime I will also deduct. Discount also I will apply depending upon the comparable asset which I am taking and comparing. Okay. So you have this formula, which is that the total discount is 1 minus DLOC into 1 minus DLOM. The whole together, so that the completely is 1 minus. So the total overall discount is 1. From that you multiply these two and you get arrive at the total discount value. Okay. So this is with respect to market approach. So in market approach, we have seen guideline publicly traded, and then you have the comparable transaction. Fine. Apart from that, what are the other market approach considerations? So next, from this, we will move on to income approach. So the income approach is we have a lot of calculations to be done for the income approach, right? So it is very simple. We always apply, the future cash flow into a single current value. See, I decided I'm going simple. We used to capital budgeting. We used to do, right? So what we will measure in the capital budgeting, we try to arrive at a net present value. So the benefits. So if I buy that asset, what is the benefit that I'm going to accrue in the future? For that, because future means it has to be discounted and calculated at the present value. From that you deduct this is the benefits minus cost which you are going to incur today. So if it is beneficial, positive, you will do. Otherwise, negative, you will not. So the same we are going to adopt here also. What you are going to do, you are going to convert the future cash flow into a single current value, right? So that because of that asset, what are the future cash flow that I am going to generate? That I will calculate, I will discount it to the current value and I'll try to say a single value, right? So in income approach method, you have various methods. DCF, which is most popular and everybody would have used this method, discounted cash flow method. Apart from that, these relief from royalty, multi-period excess earning method, with and without method, are the option pricing. And these are the methods which is used for the intangible asset, especially. These four are specifically for the intangible asset. If you see ICI RVO standard law only, it is given here. Whereas in IVS, International Valuation Standards, gives all these methods only in the intangible asset schedule. They have a separate standard on the intangible asset valuation. In that only they have included all these methods. Anyway, both these methods are given, but the place where they are given, since ICI RVO compared to ICI RVO standards, that ICSI, that is the valuation, international value, IVS has got many more standards. That is why just a lot of they have heterogeneized it. Okay, instead of putting it under one group. Yes. So, which is this discounted cash flow is the most popular used method, which everybody would have come across, right? So, we are going to find a cash flow. What is my future cash flow? Based on that, I will project. So, what is my future cash flow? I will generate in the future, which will be discounted to the present value, and I will calculate. So, how to go about? First, you have to apply what cash flow I should use. There are two categories: FCFF, FCFE. Might be whatever. FCFF is free cash flow to the firm, and FCFE is free cash flow to the equity. So these both are very popular cash flow which we use depending upon what is the valuation, what purpose of valuation. If that is, we must know only the valuation to the equity shareholders, then we use FCFE. If for the company as a whole we take FCFF, free cash flow to the firm. Then after understanding what I should take, then I have to find what is my explicit period. See that every asset has got its some time, right? Time period for which it can be used. So I just check what is the maturity period for the asset, 5 years or 6 years. So only to that extent I will take the present value factors, right? So that I will decide. If it is perpetuity, that is there is no end. It is always a business. We take a business model or a business, there will be always perpetuity. That is, we cannot say indefinite. The lifetime of that asset will be indefinite. So in such cases, we try to find out the terminal value, right? Otherwise, if it is definite, then you will take only that number of years which will be taken. Then you prepare the cash flow only for that period. So once you decide that period, you prepare the cash flow only for that period. Then if that's what terminal value is applicable if that has got a perpetuity. Perpetuity means no end. If that is there, subject asset is perpetuity, then you have to calculate terminal value. The terminal value can be calculated by using the constant growth Gordon's method. We always discount it, that is KE growth rate minus, but we always see what is my future expected cash flow divided by KE minus G. That is the most popular used. Even we use that in the dividend valuation model. price of the share we will ascertain, right? D1 divided by KE minus G. That is the most popular thing which we use in the arriving at the terminal value. We try to arrive, right? Then determine the discount rate. Yeah, here applying the discount rate is most crucial thing I would say, because you should know if the discount rate is high, if the risk is high, you better go for the higher discount rate. If the risk is low, you come to the lower discount rate. So depending if it is a startup or a startup venture, all these things, you better go for the high discount rate. That is better because the risk is more. In such case, if the discount rate is increasing, your value will be reducing. It will be in the reverse direction. If you are applying 20% discount rate, your value will be reducing. If it is compared to 15%, the value will be more. If it is 35%, even less the value will be. So it is better to apply a high discount rate if the business is more riskier. Okay. So the selection of discount rate mostly we used to do based on the cost of capital. Usually we always apply weighted average cost of capital, right? Both, if you have the company has the both components of debentures as well as equity, it is better to go for WACC, weighted average cost of capital. Or in general, the cost of capital we are, because see, what is the idea behind using this cost of capital? At least this much value you need. There should be a break even, you should know. If I'm investing so much, I should at least cover my cost. If that is not there, why I should go and invest there, right? So I should have to think and check whether that's the reason. Minimum discount rate you should use is cost of capital. And apart from that, you can even apply even higher discount rate depending on the riskiness of the asset. Okay. Then that's what. So arriving at the terminal value, you have a Gordon's constant growth method, and we have variable growth method also, which is H model we used to say. Or sometimes we use exit multiple. At the time of exit, what is my cost? Like that you can also take. Or salvage value or liquidation value, depending upon the assets, subject asset, we have to choose which method you'll be using for arriving at a terminal value, right? Then once it is terminal value is arrived, it is simple. We just try to apply the discount rate, including the terminal value, and arrive at one fixed value. That will be the value for that particular. So this is what with respect to discounted cash flow method. Then you have these are the methods which it supports intangible asset valuation. First one is relief from royalty. What is this relief from royalty? See, royalty for what I will pay? Any technological know-how I have. In that case, I will pay the royalty, right? So in such case, what will happen if I found something, some intangible asset, because of that, I need not pay end up with this. For example, I used to subscribe simple account. We are all auditors. We have an accounting software. We buy Tally and we pay Tally subscription. Very simple, right? But if instead of that, if I have my own team, ERP team who can decide, who can design my own accounting requirement, I will not pay that subscription for the Tally, right? So that relief. So because of I am finding my asset, I need not pay that, right? So I will try to find, because that what is the value, the royalty which I am not pay because of this asset. That royalty or a present value, if you take, that will be the value for it. I'm just giving you an example so that you will understand. It may be anything, trademark, patent, or brand. Since we are auditor, I think it's easy for you to understand. I'm linking with the accounting software, or that I'm just simply telling about the Tally software, right? Then what is this meme? Meme is multi-period excess earning method. So this method we use when you have more than one intangible asset that has got some other value. See that there are a lot of intangible assets we have. What is going to give significant contribution? Most significant intangible asset, that alone you use the meme method. Okay, for other methods you can use the distributor method, which is there another method, right? Because I'm not here into most in depth. I'm just giving you the hint so that you will learn, or you will try to initiate how to know this, right? Then what is this with or without method? See, because of this asset, if I have, what is the value? Without that asset, what is the value? So the difference will be the profit. So with asset, if I have got more profit, or without this asset, whether I got more profit. So the difference between the with and without will give you my value for that particular asset. Simple. See, if I having some contract, right? This is used especially for the contracts. If I have this contract in my portfolio of business, what is the total earnings I will get? If I not including this contract, then what is my value? The difference is the value of that contract. Very simple. No? That's it. Okay. Then this is the option pricing model, which everybody aware of. With this relating to the we use this Black-Scholes-Merton model, which is there in evaluation. It's the concept which is more difficult. We used to say generally, which is telling we can even value the ESOP, that SWIT equity shares, even employee SWIT option plans are being valued using this Black-Scholes-Merton model and the binomial models. These are more widely used in the options. So in that, these are to be covered, current price. So all these will come under the income approach. So we have covered a market approach in that 2 methods, and income approach with DCF along with the 5 methods of this. Right. Then we'll move on to the cost approach. So what is this? A cost approach. Cost approach is very simple. What is the cost I would have incurred to buy this similar asset by having one asset already? If I want to replace the asset, what is the cost which I have to incur? That is my value. That's all. I just take that value as my replacement cost. So here you have cost approach has got 2 methods: replacement cost, reproduction, and summation. Okay. So a cost approach method, when it can be applicable. So when the asset can be quickly recreated. In such case, we understood income approach when to be used, market approach when to be used, like that. A cost approach method can be used when there is an asset which is there, can be quickly recreated with the same volatility. Then we can use the cost approach. Or you cannot use the both income approach or market approach cannot be used. Then the last lender is cost approach you can use. Sometimes liquidation value to be determined when the company go for liquidated. In such cases, you can determine the value using the cost approach. And you have these 3 methods: replacement cost method, reproduction cost method, summation. So what is this replacement cost? So it is exactly the cost which is used for you to replicate the asset. It is not the same. The replicating the utility of the asset. So what purpose that asset is being used, that alone you take the value. So what is that cost you will incur in order to recreate the same asset, which is called as replacement cost. So what you have to do, the steps. First, you have to provide the asset providing equivalent utility. First, you have to seek the cost. So all the cost which has been incurred, or you will incur to obtain the asset which is providing the equivalent utility, and find the depreciation related to the physical function, external obsolescence. So for the total cost, reduce the depreciation, you will arrive at the replacement cost, right? And you have reproduction. So reproduction is something which I produce again. See, what is the difference between this replacement and reproduction? See, replacement is one can be used in substitution of other. Whereas reproduction is something different. If you can simply say movies, Dawn is a movie which has Amitabh Bachchan has acted, we all know. But the same Dawn has been reproduced by the same story is the same, I think, but it is acted by the Shah Rukh Khan, Dawn 2, like that it has been released. So that is called as reproduction. So it is, see, definitely the Amitabh, the value that has been created by the Amitabh cannot be replaced by Shah Rukh Khan, but still the equivalent utility, that will be say the same method in his own style you would have acted, right? So that is one difference. So if it is exact replica, that is replacement. There is no even single difference. Reproduction is very easy possible because everybody can do. So that is what I just given movie example so that everyone can relate it to it, right? So this is the reproduction cost method. So by reproducing that asset, what is the cost I incur? That will be called as reproduction cost method. And the summation method is, if I have more than one portfolio of business, I will add each and everything and I try to sum it up. If I have more than one business, multiple businesses, in such case, I will add all this and I try to arrive at the value. That is why it is called a summation method. Okay. Hope Yes, each components of the asset is a part of the subject asset and which will be added together and found out, right? Hope I tried to what I have targeted, I tried to explain whatever in a most, I think it's understandable that you have to say the feedback. And if there is any clarifications or questions, we can go, ma'am. Thank you for the session. I thank the organizers for giving me this opportunity. Hope my time is 5:50 already. So next 10 more minutes, we can have a doubts if you have anything, like you can put it in a chat box. Yes.
Yeah, ma'am. So we have not got much, but yes, one of our member is asking that if it's a comparable method, in the case of comparable method, if we have a large size firms, it's good to follow that method. But if company is very small, then we cannot use that method effectively.
Right. If it is a compare market approach itself, we can apply. Only if there is a comparable, if there is a difference between your subject asset and comparable asset is more significantly, it varies, means it is difficult, because in that case you have to apply more adjustments. Instead of that, you can go for the income method, because most of the startups which don't have that comparable, we go for the income approach method, where you can find the future cash flows and easily apply it. So
Right.
if there is a comparable data, then you take the market approach. Otherwise, you can.
Yeah. I think with all the methods which we have observed, I can say DCF model is the most prominent model where the new startup valuation model, they are applying it for their all deals which they have for the investor relations.
Yes, many of it's mostly used practically. I assigned a lot of assignments. I use only this DCF models, because we are getting. We may not get a high value like other companies will not get, no, like a traded company which we may not get. Only we get the valuation of the startups or a small organization, where we always use this method, income approach, like DCF.
So I think that would be the combination of partial DCF model, because we have to have some projections for another 5 to 7 years. Plus, we have to see the industry study also, how the competitors are going well in the market. So it's go hand in hand, I think.
Exactly.
So, ma'am, we have got another query that how can we calculate beta and market rate?
Beta we use to get the, see how you have to measure how the, so usually beta is measured by using a standard deviation, that is a risk. See, beta is basically the how your shares go along with your market. That is, if I am an automobile sector, so what is the trend in the automobile sector? If the shares are going positive, how my shares are going? So the relative measure which is there, which is going to compare with my shares and the sector's share, which is called as, which is measured in beta. Usually, beta will be calculated using the how the trends you have to use, because it is a pure mathematics calculations which you can apply and you can get it.
Yeah. Okay, I think we don't have much questions on it. We are still waiting for another 1 minute. If we get more questions, we'll surely take up. Yeah, so okay, so thank you so much, ma'am, for such an insightful session on a valuation topic. In such a startup and entrepreneurship era, I think it is one of the important aspects to understand for all the CA members as well as those who are working as an entrepreneur. I would like to extend my gratitude to our speaker, CA Kavita ma'am, to accept the invitation, putting efforts to prepare the presentation and gracing today's webinars for all of us. So on behalf of our entire team of WMEC committee, our chairperson, CA Supriya Kumar, and our vice chairperson, ma'am, for CA Priti Savla, ma'am, I would like to extend my vote of thanks. Thank you so much, ma'am, for giving us insight on the session. And we would like to hear more about it if we get a chance again for such kind of topic. Thank you so much, ma'am, for your presence here with us.
I also extend my greetings and thanks to the committee, really giving me an opportunity to share my thoughts. I'm happy, I'm privileged to be a part of this. Thank you. Thank you so much.
Thank you so much, ma'am, for coming here. Okay, so Chani, over to you for next session.
Yes, thank you so much, Pooja madam, and of course, Kavita madam, for such a wonderful session. We shall now move ahead, and we have another session by Praveena madam, of course. And it's my profound privilege to introduce our speaker for the day, Praveena Oswal madam. Very rightly remarked by Bhavi madam that similarly when I saw her profile, Praveena madam's profile, which ran into a couple of pages, of course. I realized, how active she has been in various fields. So I'll just try to brief out the things before you all. Mrs. Praveena Oswal is a fellow member of the Institute of Chartered Accountants of India. She has qualified ESA and completed certificate course on public finance and government accounting and certificate course on concurrent audit from the ICAI. Her research work, namely analysis and evaluation of Indian startups, is also published by the ICAI. She has been practicing since last 18 years in Satara district in the area of direct, indirect tax, project report preparation and subsidy proposals. She has also provided consultancy to various municipal council on double entry accounting system. Further, she has delivered lectures in local colleges, addressed national level webinars for young members on topics such as personality development, women empowerment, entrepreneurship development, startups, and a few more. She is associated with DIC and one of the engineering colleges of Satara for entrepreneurship development program. She has worked with Bharat Vikas Parishad in the capacity of the president and the secretary, and had conducted numerous social activities therein. Currently, she is elected as a co-chairperson for Entrepreneur Development Committee for the year 2021 to 2024 of Maharashtra Chamber of Commerce, Industries and Agriculture, Mumbai. Further, she is also elected as a managing committee member for the year 2022 to 2025 and is designated as a secretary of Satara branch of WIRC of ICAI. With this brief profile, I ardently welcome Praveena madam to this symposium and request her to commence her session.
Thank you very much, Chandani madam, for such a wonderful introduction. By your introduction, I feel myself so proud of me that I have done so many things over the years. And it is very much a topic of my interest after doing 18 years of practice by serving in direct and indirect taxation. When I see the problems faced by various industries, and I live in a small place, so I come to these problems of small and medium enterprises very closely. So I have done research during COVID pandemic because I have some time to study their problems, and accordingly I have prepared the research paper. And thank you very much, Preeti madam, for giving me opportunity to share my experience and views. The topic today selected is government subsidy scheme for MSME sector. Though today the startup is the buzzword, the base of any industry or economy to grow is the medium and small, micro, medium and small enterprises working throughout the country. Our country is such a big country, having 125 million population, and so they cannot be served by big industries or mega industries. They are served by medium, small and micro industries only, and very much employment is generated by these enterprises. So basically, first we understand what is the MSME. MSME stands for micro, small and medium enterprises, and act specifically to support these organizations comes in 2006, which defines this industry. And previously, service sector is not included in the definition of MSME, which is now included. So it covers classified in two divisions: manufacturing enterprise engaged in manufacturing or production goods in any industry, and service engaged in providing or rendering services. So what are the features of MSME, or which industries we called as MSME? So the industry which provide reasonable assistance for improved access to the domestic as well as export market for the businesses. It provides services and products for the domestic as well as export. So it's also supports in product development, design innovation, intervention, and packaging element of the businesses. Many mega industries are situated in many MIDCs, etc. There are various small industries which support these mega industries and supply their services to these industries. Then the MSME supports for the upgradation of the technology infrastructure and modernization of the society as a whole. It provides employment opportunity to large population. And also it supports or provides funding to the various banks in the country, because the major portion of the lending of the banks is taken by MSME sectors. So now we are having 6.3 crore units in India, and the rate is increasing very much. Before COVID, it increases by 18.5% in 1920. It provides employment around 1.10 million people, and it is 6.11% of the manufacturing GDP and 4.63% GDP for the service activities. Okay, I will share my presentation. So we see the dream of 5 trillion economy in 2024, and MSME sector will play a major role in bringing reality that dream. So what is MSME? Previously, it is only defined on the basis of the investment, but when definition is changed, and now we can decide, we can say micro enterprise as manufacturing a service unit having investment less than 1 crore and turnover less than 5 crores. Small units are having investment less than 10 crore and turnover less than 50 crore. And medium enterprises are having investment less than 20 crore and turnover less than 100 crore. For to fit in any category, you have to comply both the conditions. If any condition is not complied, and if you change to next category, if you satisfy both the conditions, then only you can come to the lower category. Otherwise, you will remain in the same category if one of the condition is satisfied. And it is very important that service sector is having the same criteria as manufacturing sector, so that they can get benefits of the various government schemes. As we say, we can see the majority portion of the 6.3 crore unit is micro and small enterprises. It is nearly 97%. Medium enterprises is a very small portion. Why do we need the subsidy or incentives for the financial for the MSMEs? Because MSMEs have facing many problems since years, and they cannot survive on, because they are run by the very small person. They are not having competitive team or person for the various other activities. So the challenges faced by MSMEs are finance is not easily available. Like startup, they are having venture capitalists or the investors. But for small, micro, and medium enterprises, the funding are invested or raised by unsecured loan or loan from the bank institution only. So if the project is viable, or they are able to provide the security, then only they can get the loan. So finance issue is a major challenge faced by the Indian MSME sector. Then regulatory issues, there are many compliances, many licenses which are to be procured before starting a businesses, and there are frequently changes in the law. Recently, GST has been changed, which are not taxable items before were taxed. And so there is very much competition and challenges to be faced by the MSME sector. Infrastructure is not developed like other countries in India. We are still developing our infrastructure. Then also the population or the employees of the MSME employees in the MSME sector are not so educated or skillful, so the productivity is less. as the manpower is less, there is lack of innovation, there is not much importance given for the research and development activities. The technology is changing very fast. From in automobile industry, we are moving toward EV, and small and medium enterprises cannot adopt that technology very easily. So it is a big challenge for small and medium enterprises. Then there is a competition with large companies and startups. Unskilled employees is a major problem. Also, it is run by MSMEs are run by proprietorship or partnership. So there is a lack of professionalism. They cannot employ the professionals for different activities. So the services offered by them are hampered. Also, we are having different states and we are having different policies in different states. So there is no standardization of policies, and there is a limitation for the expansion of the businesses and pricing and providing services over the different states. These are challenges faced by the MSME sector, and government come to know or recognize these challenges and come to know about the come with various incentives and subsidies for the MSME sectors. Now we heard many like package scheme of incentives or various subsidies, and we thought that both are same, but both are not the same. Subsidies are one-time lump sum amount given to the entrepreneur by the government. It's a financial help to cover the cost of the infrastructure or initially starting the project. And incentives is provided to cut down the cost or remain in the market. So it is like lower interest rate or subsidy in the form of taxes, etc. Now, in this lecture, we are looking specifically on the subsidies offered by the government. For taking the benefit of the subsidy, you have to register in the on Udyam portal, which is given by the Ministry of the Medium, Small and Micro Enterprises. It is very easy process, online process, free of cost. You don't have to pay any registration fee, but it is compulsory that you have your Udyam registration. It is permanent number. You are given your QR code. It is PAN and GSTN linked. So your turnover, etc., will be you can get from the GSTN portal and or income tax portal. So it will take hardly 2-3 days to register on the Udyam registration, and there is no need to renew this registration year after year. There is single window system at champion control room, and if you are getting any problem, you can contact your local district DIC center, which will help you in the process of the Udyam registration. The schemes are bifurcated according to the benefits given under 5 sectors. The first is credit and financial schemes, under which funds are provided to the medium and small enterprises. That is Pradhan Mantri Mudra Yojana, under which you are getting collateral free loan up to 10 lakhs at low rate of interest. Then credit guarantee trust fund for micro and small enterprises. This scheme is only for micro and small enterprises, CGSME, in which you don't have to provide collateral security. The primary security and the government will provide the guarantee for this scheme. Then credit guarantee scheme for subordinate debt. Then SIDBI Make in India loan for enterprise. It is called as SMILE. Credit linked capital subsidy scheme, and most popular Prime Minister Employment Generation Scheme. Under this, credit and financial assistance is provided by the banks. You have to apply to the banks for these schemes. Then to overcome the challenges of the technology assistance is provided for that purpose. If you go for that technology, some assistance is provided to you. That is financial support to MSME in Z certification scheme. That is zero defect, zero effect scheme to improve. And you will given the prizes or ranking according to the criteria decided. Then designing training for design expertise to MSMEs, support for entrepreneurship and managerial development of SMEs through incubators. Government provides funds to the incubators, which provide these SME units supports they required in scaling up their businesses. Then digital MSME scheme. These are schemes for technology assistance. Then market assistance. Many times units are being small, they are not able to take the services, or the requirement of upgradation is low. So same kind of units come together and um, forms up infrastructure or common facilitation center, and for that purpose market assistance is provided by the government. The scheme is called MSE CDP, Cluster Development Program. Then to overcome the challenges of skill development schemes, or schemes are provided by the government. That is Scheme for Promotion of Innovation, Rural Industries and Entrepreneurship, that is ASPIRE. Entrepreneurship and skill development program. Then assistant to training institutions. Government provide assistant to training institution to given training to the students or aspiring entrepreneurs for the development of their schemes. Then there are some other schemes, that is market assistance schemes, revamped scheme for funds for regeneration of traditional industries, and international cooperation scheme for taking participation in the trade fairs and taking participation in international trade fairs. Government gives you subsidy and assistance to participate international trade fairs and other trade fairs. Now we look in detail in some of the schemes. First scheme is Prime Minister's Employment Generation Program. This scheme has started in August 2008, and it is introduced as new credit link subsidy program. It launched by merging two previously old schemes, that is Prime Minister Employment Generation, Prime Minister Rozgar Yojana and Rural Employment Generation Program, for the generation of employment opportunities by establishing micro enterprise in non-farm sector. These schemes are for industrial and commercial sector only. These for rural or agriculture industries, there are other subsidies. It is operation since 2008-9, and its operation has been approved continuously in 5th Finance Commission also for the period of 5 years from 21-22 to 2025-26. It is central sector scheme being administered by the Ministry of Micro, Small and Medium Enterprises. It is implemented by the Khadi Village Industries Commission, KVIC, a statutory organization under the administrative control of the Ministry of MSME. At national level, at state level, the scheme is implemented through state offices of KVIC, then state Khadi Village Industries Boards and District Industries Center, DICs. DIC centers are in every district for board and banks. Government may also involve other suitable agencies for implementation of the scheme. The government subsidy under scheme is routed through KVIC through the nodal bank to the financing bank branches and subsequently transferred to the beneficial account after completion of the lock-in period. There is a lock-in period of 3 years. You have to first apply online for the PMEGP scheme. The KVIC board sanction your scheme, and then you have to give the preferred bank in the application. Once the application is sanctioned by the KVIC, you have to approach to the bank that your application is sanctioned, and after bank scrutiny of your documents, a bank will give you loan, and your application, you got the loan, and then they inform the KVIC about the disbursement of the loan. Then subsidy will be disbursed by the KVIC, which is kept in the bank as TDR, time deposit for the lock-in period of the 3 years. After completion of the 3 years, and if still your unit is running, then that subsidy then that TDR, time deposit, will be deposited in your loan account. You don't have to pay interest up to the portion of the TDR, which is subsidy amount you get from the government. PMEGP is subsidy is basic objective of the subsidy is to generate employment opportunities rural as well as urban area of the country through setting up of new self-employment ventures project or micro enterprise. It is awarded to new enterprise only. If you have taken benefit already under any scheme, then you are not eligible to take the benefit of PMEGP. It is the scheme helps to traditional artisan and youth and give self-employment opportunity to the extent of possible at their places. India is wide or large country. We have large area and the population is scattered all over the country, tier 1, tier 2, tier 3 cities. And mainly this scheme benefited in tier 2 and tier 3 cities to generate the employment in that area, to generate the livelihood in that area also. They also provide entrepreneurship development training to the applicants. It is compulsory to you have EDP training before getting a sanction. So not only they give subsidy, they also give you training for the successful running of your enterprises. The amount of subsidy is differ from the area and which category you are. And we also see the extent of loan you are get from the bank. So if you are from urban area, the subsidy amount is low. You are rural area, subsidy amount is less. For general category, in urban area, you will get 50%, 15%, and for rural area, 25%. And if you are from special category or women entrepreneur, minorities, physically handicapped, ex-subsidy, or NCR area, that is northeast area, hill and border area, etc., the subsidy amount for urban area will be 25% and for rural area will be 35%. And also the own contribution for general category is 10% and for specified category is 5%. The maximum amount before it increased from 25 lakhs to 50 lakhs. And for service sector, it is increased from 10 lakhs to 20 lakhs. So the loan amount is for general category, it is 90%, and for special category, it is 95%. It is all about the PMEGP, and it is the most popular scheme in small, as I said, tier 2 and tier 3 cities. The next is CGT-MSE. Many small and medium enterprises or micro, small and medium enterprises are not having any asset to give as a collateral security to the banks, and without security, banks are not hesitate to give you loan. So the government has sanctioned the CGT-MSE scheme. For that purpose, it has created credit and guarantee trust, and with the help of the SIDB, the fund is provided to the banks, and bank gives a loan to the micro and small enterprises collateral free. The primary security, of course, the bank has pledged on the primary security, but bank will not demand collateral security for this loan proposal. It is available for micro and small enterprises only. As you can see, the government has changed the logo also. The government changed its thinking. Like boring website or boring government offices, it has moved digitally so that more youth can attract toward the various schemes. And it depicts the changed mindset of the government towards the industry of the India. So it was introduced as hybrid before. It is now the hybrid security. You also provide collateral security, and the loan portion which is not covered by the collateral security, bank can apply for the CGT-MSE cover, and for that purpose, it have to pay guarantee to the CGT-MSE board. So the guarantee fee will be charged by the bank to the borrower, which is very less amount, but the borrower can get the collateral free loan. Only the asset which are purchased from the loan taken or the project asset will be having charge of the banks, and they will get the loan. This amount is increased tremendously in 2021. 8.36 lakhs guarantee were approved, and 36,954 crore amount was disbursed under CGT-MSE scheme. Under CGT-MSE scheme, after COVID, the government has started providing loan to the vendors, street vendors also. The amount is small, but it is great help to the street vendors. Like very small 10,000 amount is provided under this scheme. And if the street vendors repay that amount, then the amount is increased by 200%, that is 20,000. And under that scheme, 14.38 lakhs guarantees were given of 1,435 crore amount. Now we see the quantum of the guarantee or the quantum of the loan covered under the CGT MSE scheme. So for micro enterprises, the cover is up to 5 lakh loan. The cover is 85% of the amount, subject to maximum of 4.25 lakhs. For loan up from 5 lakhs to 50 lakhs, 75% of the amount is covered under CGT MSME. And for loan above 50 lakhs up to 200 lakhs, it is 75% of the amount. For women enterprises, the coverage obviously is considered, because though we are having 47-48% of the population, we are not much active in the enterprise or in the business sector, and government want more women participation in the business sector. So it is giving more subsidies, more incentives to the women entrepreneurs. So women entrepreneurs unit located in Northeast region, etc., will get 80% amount loan amount covered under CGT MSE scheme. Then other category of borrowers, 75% of the amount is covered under CGT MSME. So it is great help that up to loan of 200 lakh rupees, 75%, 150 lakhs are covered under CGT MSME, and you have to provide only security for the 50 lakhs, which is obviously of the primary security. Then the obviously you don't have to apply directly like PMEGP. You don't have to apply. CGT under CGT MSME, bank do all the process. Bank submit the application and get approved, pay the guarantee fee. Everything is done by the bank only. You have to only take follow up with the bank. Now the credit link capital subsidy for the technology upgradation. Financial assistance. Nowadays technology changing very fast, and for that purpose financial assistance is required, and government recognize that importance and giving credit link capital subsidy for the technology upgradation. It is subsidies available only if you have taken loan from the financial institutions. For that purpose, MSME have to apply for the introduction of the well-established and proven technology in the specific approved 51 subsector or product. The sectors and products are already decided. So you don't get your application rejected for the subsidy, you have to study the subsidy or the guidelines thoroughly. You have to check with every guidelines and every requirement of the subsidy. Otherwise, your subsidy proposal gets rejected, and the efforts and the investment will be waste. So there are only 51 subsector or products for which this subsidy is available. It is for existing unit or for new unit and for expansion also. For that purpose, you must have valid Udyam registration and institution credit. You have to get the loan for buying of the new plant and machinery approved under the scheme. The buyers are specified from which you can purchase that machinery or which brand you should purchase. Second hand and fabricated will not be eligible for the subsidy under this scheme. Special benefits are applicable in case of scheduled caste, scheduled tribes, women, Northeast region, hill state, and D+ or zones, etc. It is admissible for the investment in acquisition or replacement of the plant and machinery. Only condition is that you don't have to purchase second-hand or fabricated machinery. The quantum of the assistance is 15% of the loan amount. A maximum is 15 lakh. So if your loan amount is more, though your loan amount is more or investment amount is more, you can get subsidy maximum up to 15 lakhs only. And applicant meeting the eligibility criteria should approach to the loan lending bank And on behalf of applicant, the lending bank will examine and apply for the subsidy claim through dedicated online portal. So this procedure is to be done by the banks. So you have to follow up with the banks for the getting this subsidy available to you. Now it is online procedure, so there is every track that if bank has made application or not, and government has made everything online, and there is a track and there is a time limit for which through which the bank has to comply with the guidelines given by the government. The guidelines are available in the various website of the government. The main website for the MSME subsidy is www.bcmsme.gov.in. As this is a digital era, you get every information on the government portal, and government has made its portal very user friendly. You have get all the guidelines, updated guidelines on the portal, how you can make application, various videos are available, and you can get these guidelines clear. Then there are the finance or working capital is a major requirement of the small and medium enterprises to cater, and if the funds are blocked in the payments or with the debtors, then there is a working capital or financial crunch faced by the small and medium enterprises. So in a pandemic, government recognized this problem, and they have come with the MSME Samadhan Yojana, which deals with the delayed payment. It contains provision for the delay payment in which you have to apply if there is a delay in payment from the debtors beyond 45 days. So you can give credit up to 45 days. And if you don't give payment within 45 days and you are registered MSME, that is you have valid Udyam registration, then you can apply for the recovery of the delayed payment. And for that purpose, the buyer is liable to the buyer is liable to pay compound interest with the monthly rates to the supplier on the amount at the 3 times rate of the bank rate notified by the RBI in case he did not get the payment in time, that is within 45 days. You have to apply online. State government notified various authorities and the rules of this procedure. You have to apply online, and automatically the portal will forward your application to the MSc FC Facilitation Center in your area, which will decide upon your application within 90 days. So the timelines is given to the government department also, in which you have to, the department have to act upon your application. And if after you get the decree in your favor, if the opponent is going for the appeal, then also he have to pay 75% of the amount of the decree. And in many cases, this 75% of the award amount is given to the seller to help him in his for his working capital or financial crunch. Then there is another scheme, that is MSME Sambandha. That is the government has notified various public sector industries or government authorities to procure goods and services from the MSMEs only to promote the MSMEs. So the cap is 25% should be procured from the MSME sector, and out of that 4% from the MSME. MSE is owned by the scheduled caste and scheduled tribes, and 3% from the MSME owned by the women entrepreneurs. However, if there is no applicant or there are no application from women and scheduled caste and tribes, then 25. All other MSCs will be covered in 25%. So for that purpose, if you are not L1 in the bidding process, if you are L2 and there is a gap of 15%, then the L2 MSC is given opportunities to match the rate with the L1, and they get the contract with the price quoted by the L1. So this benefit is given to the MSC to take the contract. They have not given contract at the price quoted by you, but you have to match with the price quoted by the other applicant, which is L1. So you have to cut down your price by the 15%. So this system is fair, equitable, transparent, and competitive and cost effective. Then the another scheme is MSE CDP, that is Cluster Development Program. So many small enterprises cannot upgrade, or the machinery is very costly, or they have not much capacity to take the benefit of the large machinery. In case they can come together and take the benefit of this scheme of the government, that is called Cluster Development Program, in which this scheme is adopted as a key strategy for enhancing the productivity, competitiveness, as well as capacity building of micro and small enterprises and their collectives in the country. A cluster is a group of enterprises located within an identifiable, as far as practicable, and contiguous area and producing same or similar products and services. The essential characteristics of enterprise in a cluster are similarity or complementary in the method of production, quality control and testing, energy consumption, pollution control, etc. They are having similar level of technology and marketing strategies and practices. They need a channel for communication among the members of the cluster, and they are facing common challenges and opportunities. So like if there are many food processing units, and they require a cutting machine, which is a big machine, and they are having the machine is of capacity of 50 tons per day, and the processing capacity of the unit is 5 ton only. Then how can they invest in that 50-ton capacity machine? So they can come together with 10-15 minimum units are having different capacity and buy that machine and take the benefit of that machine. So that there is cost cutting, improvement in the quality, they can take the benefit of the improved technology. There is a one district, one industry concept also. So you cannot take the benefit of cluster development in every district, or you cannot take the benefit of different clusters in the same district. So to cater the demand of the rural areas, the government has provided the scheme of cluster development program. Likewise, in Ichalkarnaji, there is a textile cluster development. So many small artisans or businessmen come together having handlooms, and with this cluster development, they have buy the bigger machines and process their manufacturers. They can pack it professionally, they can take the various benefits and sell their products. The new guidelines of cluster developments are given by the government on 24th May 2022. So the objective of this guideline is to support the sustainability and growth of MSCs by addressing common issues such as improvement of technology, skill and quality, market access, etc. To build the capacity of MSC for common supportive action through formation of self-help groups, consortium, upgradation of societies, etc. So for to take the benefit of the cluster development program, you have to form a Section 8 company, which is for the development of the common facilitation center. The subsidy amount is invested in the infrastructure which provides services to these units of the cluster, and which help them to increase their profit, reduce their cost, improve their quality of the products, set up for testing of their products, also to store their raw material. Then the facilities are provided for the effluent treatment, complementing production process, etc. This cluster is provided for the promotion of the green and sustainable manufacturing technology for the cluster, so as to enable unit to switch to sustainable and green production process and products. Now government not only give stress or give importance to the development, but it gives importance to sustainable and green production. We should not think of today's development or today's growth, but we should think of the sustainability over the 15, 20, 50, 100 years. So government is providing facilities and subsidies to for the sustainable and green production process also. There are various other schemes which are depicted. There are around 50-30 schemes which are given by the central government, and various state government provide different scheme for the development of the state according to the requirement of the states. And you can get Government of India has launched a champions website on 1st June 2020, and which is named as Creation and Harmonious Application of Modern Process for Increasing the Output and National Strength portal. It is technology-driven control room cum management information system. The system utilizing modern ICT tools is aimed at assisting Indian MSMEs march into big league as national and global champions. So it is full of all the you can get the information of all the government schemes, all the government website. It has depicted 842 FAQs of different government schemes, guideline processes through which you can get answer to all your questions, and it can provide information to all the government website, all the government links and guidelines through which you can come to know about the various schemes available to the Indian MSME sector. It is launched in COVID because government everything is locked. People cannot go outside their homes, cannot go in their industries, cannot go in the offices. Government officials are not able to go in the offices and provide assistance. So government moved fast digitally in the COVID period, and industries also moved fast and changed their technology and moved to the digital India. So this website is developed or launched to help the MSME in the difficult situation of COVID-19 in terms of finance, raw material, labor, permission, etc. It helps them capture new opportunities like manufacturing of medical accessories and products like PPT, mask, etc. It helps to identify the sparks, that is bright MSMEs who cannot only withstand but also become national and international champions. So the MSMEs which perform well in this difficult time, the government recognize these institutions, MSMEs, and provide them assistance to grow fast. So you can get various information of the various schemes on the government MSME portal, that is Directorate of Commission MSME, Micro, Small and Medium Enterprises, dcmsme.gov.in, which are depicted, which has given all the links for the various schemes of the government. So what are the opportunities available to the CAs? CAs are having all the information about the businesses. They know the problems, so they can provide services to the MSEs for the legal compliance like income tax, GST, various permissions, for the application of the loan, project report preparation, and then getting calculating how the subsidy will help the organization to stand in the difficult time. One thing you have to remember that there is you should not start the industry or as there is a subsidy, because once the subsidy you get subsidy, but if you can't sustain and make your business profitable, then your own investment and efforts will waste. So there is you should not start your industry for you are getting subsidy. If you are passionate about the business, if there is opportunities on market is available for that product, then only you should go for that business and take the benefit of the opportunities. The subsidy differs according to the area. So there is more area in D, more subsidy in D+ zone than A, B, C, D zone. So you can shift your business from B zone to D plus zone. But before shifting your business, you have to calculate your projections, cash inflows, outflows, and your profitability, your sustainability, your BVP, break-even points, etc. And then only you can take the benefit of moving your industry from B, C to D or D plus zone. Then the CS can provide whatever, as I said, management consultancy services, then accounting auditing services. Virtual CFO is a nice concept in various industries. In big cities, company cannot afford a full-time CA, but to overcome the challenges of professionalism, they can apply the virtual CFO for some hours in the day or some days in a week. They can take the services of the professional CAs and they can grow their businesses. Then in funding, CAs can help in MSME sector. CAs are well versed with the various subsidies and they are start to grasp the knowledge of the subsidy. So they can help if you are having various clients, you know their businesses well, you know the potential of your client, then you can suggest your clients various subsidies available. You can help them to upgrade their technology. You can help them to exhibit their products in the national, international fairs and great subsidies provided by the government to participate in these trade fairs. Obviously, for that purpose, CA must be aware about the various schemes offered by the government. These schemes, scheme change, the government is very active. They nowadays they launch various other schemes and which are available on the portal. Like for the MSME, that is BC MSME portal, for that Startup India portal also, they launch various competitions also, so that these MSMEs which are doing better or good job get recognition. Then for obviously for tax compliance, CA can help. Also experienced CA having knowledge of the businesses and knowledge of various all sectors of businesses can help them with the services of the mentorship also. And nowadays CAs are being part of the other side also. They are having part of the various MSMEs also. I know few of CA are having own food processing units, or having own BPOs, or having own facilitation centers for providing services to the MSMEs. They are themselves small entrepreneurs, and I like to quote or I like to mention the thing that we are having lecture on 27th June, MSME Day, and the general manager of our DIC center says that we can provide loan under PMEGP to CAs also. So CA can get benefit as their service providers, so they have registration under Udyam, and they can get the benefit of the PMEGP scheme, CMEGP scheme, and get the subsidy. If women then and a small area, then they can get the benefit up to 35%, and urban area they can get subsidy up to 25%. So being CA, you can get the subsidy as an applicant also. So these are the opportunities. As I said, there are some do's and don'ts also to take the benefits of these schemes. For everything, you have to plan that professional approach. You should not be emotional or should not. You have to be very planned in. You have to get full information, and you have to give correct information to your clients. You can get theoretical information from the website, but you should have connect or contact with the offices in your areas. There are DIC offices, there are NABARD offices, there are subsidy sale in the various regional offices, bank offices. So you have to have communication with these officers so that you can get the updated information about the subsidies. What are problems faced by these lenders, so you can guide your clients accordingly and you can avoid these mistakes. Then you should embrace new technologies. You should keep yourself updated about the new schemes and new technologies. I myself completed the MSME course offered by the CA Institute, which is 30 hours course, which gives you all the information about the various schemes, various mechanism, what is the organizational structure of the government, how the policies are formed, how the funds are flow, what are the guidelines, and how you can get the information, what are problems faced by the industry. So you can update yourself with the new technologies. You should invest in the digital ecosystem. There are various, there must be having, the CS are using softwares for the day-to-day office of their work. There must be MI system, client relationship management system, monthly reporting system, daily knowledge updation system. So you should invest in these digital products. There are various products offered by the CA Institute also for CAs. So you should get or visit our CA Institute website, through which you can get the information of the various digital products offered by the Institute for the CAs. You should invest in your skilled workforce. You should not only keep yourself updated, you should keep your staff also, because they are working in day-to-day activities, they are dealing daily with the clients, so there should not be mistakes made by the your staffs. Then you should stand or create your unique position in the market. So there are various CAs. I know one CA from the Dhule, a small district. He is providing services all over Maharashtra, even all over India, in subsidies only. So he focused on the subsidies. He get expertise in that. I can mention the name of the CAGB Modi, because I'm get very inspired by him. That from such a village, he are providing lectures all over India on the various government schemes. So you should now the days are specialization. So this is one of the major area of practice on which you can focus. Besides compliance of the besides tax compliances. Then these opportunities, you have to be active. You have to grab the opportunities. You have to study which industries are lacking, what are opportunities for the industries in your area, and what are schemes applicable in your area, and accordingly you can study that schemes and offer your services. Then the MSMEs also should focus on quality and research and development. You should guide your MSCs that they should focus on research and development activities. There are various business networks, like you can guide your clients to be part of that business networks. You yourself become the part of various CAs networks and expand your businesses. Like there are some do's, there are some don'ts also, which is you should expand your mindset. You should keep your mindset, growth mindset. Then only you can tap these various opportunities. As I said, it should be planned decision making and not gut based decision making. मुझे लगा कि ऐसा होगा इसलिए मैंने ऐसा किया, ऐसा नहीं कर सकते हैं. So you should think over 5 years, 10 years. Now startups are coming. They are providing very facilities for the tax compliance at very less rate, because they are having technology with them. So you have to compete with these startups or other practitioners in your area. So you should stand yourself on your expertise. You should keep your quality standard high. Though in initial years you will get difficulties, there may be more expenses and less revenue, but in long term, if you maintain your quality standard, then only you can stand in the market. And besides that, there are now CSR soft targets of the government also. So you should keep your quality standards. Then utilization of funds should be proper. Some of the CAs are not recovering their fees for 4-5 years together. So if you are Udyam register, then if your client does not pay in 45 days, then you can take the benefit of the MSME Samadhan scheme and get your bill amount recovered from the clients. And you should make investment in knowledge updation. You should make investment in the technology updation. It is not the cost, but it's investment. And you should compliance with the various frameworks and governance guidelines also. These are various portals. You will get information on my MSME portal of all the government schemes, all the guidelines. As I said, the champion portal is having 842 FAQs, which give answer to all of your questions. Then there is MSME database, Udyam registration, MSME Sampark. Regarding Udyam registration, there is a similar website which provide Udyam registration at the charge of fees of ₹1,000. There is a line on the government website that government does not charge single rupee for the registration of the Udyam. So you should know, you should aware about these threats in the market. Then there is e-marketplace, there is a trades platform, then DPPIT registration platform for the startups, MSME Sambandh website. These are various websites which you should, if you want to practice in the MSME sector, you should visit that website daily for half an hour. You should dedicatedly give these websites so that you can keep yourself updated. You can get the vision of the opportunities available in the MSME sector and you can grab that opportunities. So this is my today's submission regarding the government schemes, subsidy schemes available for the MSME sectors, and it can certainly give some inputs for the young members and the experienced members who want to change their practice, who want to improve their service qualities. Thank you very much for giving me opportunities. And if there is any questions, these are welcome.
Yeah, ma'am. So I think it's a very niche topic, which I think there's a lot of information which I also don't know about it. And like starting from MSME registration, from going towards their schemes, lot of programs which government has initiated. So I think it's overall it's a kind of a complete knowledge pack session for a specific topic of MSME. And if I see, I also don't know few portals which you have just mentioned: Champions portal, Trades portal. So I think if they are giving us a FAQs model for various other doubts which we have, is amazing. Fantastic coverage of MSME, to be very frank. In fact, if I see personally, there are much information which I also require as an input. So thank you so much for your amazing session on a very, very specific topic on a subsidy scheme by the government for MSME sector. So it's actually a privilege to propose a vote of thanks on behalf of WMEC committee, our chairperson, ma'am, CS Priya Kumarji, and our vice chairperson, ma'am, for CAPP Samna. And it's on behalf of the entire committee members, we are really having a good opportunity to hear about the entire topic which you have covered today. So I think in today's era, both the sessions of funding, the valuation, as well as MSME sector, if we blend both the sessions, I think it's a full package for a new startup or a potential entrepreneurs to see the insight about the topic. Thank you so much, ma'am, for the huge knowledge which you shared today, and would be really great if we have more sessions like this with you. And I think from a viewer's point of view, we didn't get much information, but yes, there's one member who has mentioned the request that can we share the PPT with them.
Okay, I will share the PPT with the technical team. I think they are having the participants' email ID, so they can share the PPT with the email.
Yeah. Okay. So I think all the members who are listening us, those who have participated, they'll have a privilege to see the information, which is a collation of all the information for MSME sector. So thank you so much, Praveena ma'am, for your full support, your efforts which you have put it today for just combining the entire information in shortly in 45 to 50 minutes. Amazing session. And thank you so much to be here with us today. Thank you, Chandni, for your time between 5 to 7 on a working day to be with us. Thank you so much. Thank you, technical support team, to make it successful every Wednesday. And thanks to Ruchi ma'am, who actually coordinates a lot of things for us every week. So thanks to all the entire team which is working to make it successful every week.
Thank you, Pooja, also for being part of this session. As it is online session, we cannot see the participants. So to be interactive, we can see the faces of the coordinator and moderators only.
Right.
So it is nice to be company in such a wonderful session of you both.
Thank you so much, ma'am. So can we just stop the recording? Technical support team, Akash is there with us.
I think we are able to complete it in time.
Yeah, it's complete.
Recording stopped.
Yeah, that's great. So you stay in Satara only, ma'am?
Yeah, I stay in Satara.
Okay, because I used to take the lectures for Satara branch. Rishikesh sir actually coordinates for the students. Huh?
Yes, yes.
Yeah.
Yeah, he's in current MCM team also.